Hello, welcome to Winners FX. It's really been a while. Today is 27th of December, so I wish to wish you all, my viewers, compliments of the season. Today we're going to be looking at how to scalp using the zigzag indicator. So I tagged this video as the zigzag scalping strategy or scalping the zigzag way. Okay, well, that's by the way. So on our screen, as we can see, we have step index, and now with this strategy we're going to be using M1 or the M5 strategy. Okay, it's a strategy for scalping, especially for those with low equity. Okay, with this strategy you can be able to raise your $10-20. Okay, you can be able to scalp profitably with it if you apply what I'm going to show you right away. So as it is, again, if you really want to uh, profit from this strategy, you really need to have a very sound knowledge of price action. Okay, because as you can see on the screen, I have only two indicators. Yeah, sorry, three. That's the zigzag, the 50 EMA, which is this green line. Okay, again, below here I have on my indicator window I have MACD, okay, which we're going to be using to identify divergence, because spotting divergence is one of the first things you take note of when using this strategy I'm going to show you right away. Okay, so as you can see, like I told you in the beginning, you need a sound knowledge of price action. Now what do I mean by that? What I mean by that is taking note of the formations of lower lows and lower highs, and higher highs and higher lows. That's in terms of downtrend and upward trend respectively. Okay, so as you can see from here, at this particular point we have a high being formed. Okay, and as you can see, the zigzag indicators also make it perfect and clear for us. So from this high, what do we see next? We see a drop to form a low at this point. Let me use this rectangle to denote it. This is our high. Okay, and this is the low being formed after the formation of that high. Then after this after this low, what do we have? We have a lower high formed here. Okay, now this is the valid lower high. After this valid lower high, what do we have? We have a low. Okay, we have a low here being formed. As you can see, it broke structure to the downside. This low has been taken away by this low. Okay, followed by a lower high, followed by a lower high formed here. Then again, this low was been taken out to form a lower low. Okay, from a lower low at this point. So what do we observe from here? We observe that this low has been taken out to form a lower low. So on the chart, if you take note, you spot divergence and the price is forming a lower low, whereas our MACD indicator, you see a higher low formation. Okay, so if you can see here, we have lower lows, whereas here it is forming a higher low. That is to show or to say that the bullish sentiment is beginning to come into play. So having spotted this, what do we do? Take note of the highs in between the divergence. Now this is the high between the divergence. You look left again, you see this is the swing high. Okay, this and this are the swing highs. So you connect the 2 points with your rectangle line, just as you can see on the screen. Now, having done this, one key thing you need to take note is this low that was taken out by this drop. Okay, this low was taken out by this drop, and there is a bullish order block, which is this, that sponsored the drop that took out structure to the downside. So if you mark it out, this order block, expect price to come and do some manipulations within this zone. Okay, which it finally did. Okay, then after the manipulations within this zone, what happened? There's a break in the trend. Okay, this trend line was broken with this fine bullish engulfing candle. Now at this point, you strike. Okay, you go for a long at this, or at the close of this candle, this bullish candle that broke trend. Okay, so if you look at your indicator window, the MACD, you notice that the histogram lines are beginning to form above the 0 level to confirm that the trend has been shifted to the upwards. Again, the 50 EMA, as you can see, is now below the price. So when you go for a buy at the close of this candle, look at your left and take this as your first TP point. Okay, this particular mark should be your TP1. Okay, then your TP2 should be as close, or let's say close to the tip of this. Okay, give it some space. You can take your TP2 at this area. So as you can see, price valued up with your TP1. Then one good thing to take note of is, having taken your TP1, you place your stop loss, which is initially should be here, somewhere here. You bring it, take it to break even in order to protect your funds. Okay, so as you can see, price valued up to hit to strike your TP1 and TP2 perfectly. So as you can see, currently what we have again is another setup being formed. Okay, that's at the moment. As you can see, using your price action, we have higher highs being formed. Okay, and lower highs again being formed. So with this particular strategy, if you look at the MACD, we have from this point to this point a higher high formation. Okay, the higher high is being formed from this point to this point. Okay, whereas if you look at the MACD, we have a lower high being formed. Okay, that is to say that another setup is being formed right away. So if you look at the swing low in between this divergence and connect it to the base where the rally originates, which is this. What do we have? we have here a line connecting. Okay, you extend it to the future, so you patiently monitor the price. Okay, patiently monitor the price to break your trend line and give you a perfect entry setup, so you can go for a short. So thank you for listening. We'll meet again next time. Bye bye.